Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. November 16th, so November is officially half over. We have a month and a half to go until 2022. Wow, it's amazing. This year has absolutely flown by. So, yeah, kind of a crazy morning today. We started off with a bang with retail sales, and wow, the markets were just all over the place, up, and then I saw a spike, and then they went right back up again. So, yeah, and a lot of stuff going on in the news today. So we have a lot to really cover today. I want to make sure that we get everything in time. So I'm going to dive right into the charts. Actually, obviously agenda, but we're going to dive right in. So for those of you that don't know me or that have heard me speak one time, I know we have a bunch of new people coming in that were attendees to the IG Summit. Welcome. It's nice to have you guys over here as well. I didn't really give a huge breakdown over there because we were very limited on time. But I've been trading for, I hate to say over 20 years, but yeah, since the 1999 kind of Y2, I'll just say I've been trading since Y2K. Makes it easier that way. Doesn't make me sound as old. But been trading since Y2K, started stocks and traditional options. Didn't have, YouTube back then. So I was reading a lot of books, going to seminars when I could to see live presentations. Obviously probably not as much as, probably not as much as available as in Chicago or New York, but Washington, D.C., had quite a lot of that stuff. So got out, saw a lot of different things, learned really kind of what not to do in trading, found the foreign currency market after about 6 years, fell in love with it, thought it was absolutely amazing. It was everything that I felt like I was missing in the other two markets. Found it, and started trading futures. Spent a number of years traveling around helping other people trying to find their path in trading. Became a financial advisor for one of the big three banks, so I kind of got the inside look of what was really happening in the markets. Learned about bonds for the first time in my life. Knew absolutely, been doing it for 10 years and never really understood how to use the bond market. I ended up going up and actually working in New York City. I actually lived, my apartment was 2 blocks from the New York Stock Exchange. I used to walk, I literally would walk past the New York Stock Exchange every day for work. I could look out the front of my office and actually see the bull. It was kind of cool. I would actually eat. There was a really cool eatery. I have to call it an eatery, but there's a really cool place that I used to get sandwiches at, literally right next to the bull. I used to see it every day. People taking pictures, millions of people. It's crazy. Learned a lot, heard a lot of stories, and really kind of opened my eyes a lot to really what was happening behind the scenes. We're told a lot of stuff, but the reality is not as much stuff is happening as you guys would think there's actually happening. So with that said, came back out, became a teacher, decided that really, being an advisor, I'm not really what I was cut out for. It was not what I loved about the markets. It was the exact opposite, actually, of what I thought being an advisor was going to be. And I realized that helping people was my number one priority. So with that said, every one of these presentations, if you guys have been here before, you know this, but I want you guys to get a golden nugget from every time we meet. Something that you didn't know, something that's different, something to look for, whether it be homework or just a new way to kind of look at or analyze a chart. That's my goal every single session. I just finished actually a great mentor session. I did the 30-minute mentoring session for the last IG education event, and I felt like I should do one as well for the for the Nadex event. I did one for the IG event as well. So I just did actually a Forex conversation, and it's amazing. Doesn't matter how many of these I do, I get the same questions over and over again. And it's funny, people in the same scenario, it's like, I've heard this multiple times. I'm like, here, this is what you need to do. So awesome, really great experience. I love doing them. Hopefully you guys have taken advantage of them already, because it has definitely been fun, and it's something I'll probably continue for other events as well. With that said, let's dive right in and let's go to the kind of risk disclaimers, because again, we're talking about potential trade setups. We obviously need to make sure that we cover risk. You guys all know that trading with Nadex involves risk, and it may not be appropriate for all. Members risk losing the cost at the end of their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is being construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. So it's kind of cool. I've now spoken for Nadex and the IG Group as a whole. So with that said, whoops, we're jumping all over the place. Little trigger finger action there. So first things first, let's cover the upcoming news events. You guys know I love news trading. I actually uncovered a pretty interesting thing or a pretty interesting situation in the mental recession a little while ago. This gentleman was more of a swing-based trader, right? Well, looking at the pound dollar in 24 hours, it had moved 4 pips. I said, how's that swing trade working out for you? It's not really that type of market right now, so understanding market conditions is important. The pound, however, did go up 65 pips and then drop back down 65 pips, so there was plenty of trading opportunity. Again, it was just the wrong market conditions for the style of trading that he was doing. So why did it move so much? Obviously, the pound news that we heard this morning about employment. So we will cover the rest of the upcoming news events of the week, which ones are going to be important and how you can potentially trade them. Then we'll cover the indices and we'll dive in and see what kind of happened. Now, again, as always, this is my caveat. It is 12. It is a little bit past trading time for these. So there's only so much that we can actually do with them. But I'll show you some opportunities, potential areas for the rest of the week, particularly around news. Then we'll cover currency. So currencies. Okay. If you guys are not looking at these, you're missing out. There's so much stuff going on with currencies right now with who's tapering, who's raising interest rates. The comment today on the pound was basically the comments that they made today. There's basically going to be a vote, or there's going to definitely be an interest rate change in December on the pound, and the market needs to adjust for the next couple of days, next week, 2 weeks. So there's a lot going on. Everybody's at the same stage right now. Tapers off, raising interest rates, curbing inflation. This is all currencies. This is like the bread and butter, like the ideal, the sweet spot. So we're going to cover that opportunity and kind of see what we have for this week coming up. Then we'll cover commodities. Natural gas, as I hate to say, it was down last week under 5. It is on a tear this morning. Probably because of the weather more than anything else. There's a lot of cold going through. It's really kind of the first bit of fall. Like, if you think about it, we made it to the second week of November before kind of cold temperatures where you needed a jacket made it in. So not too bad. We'll see if we can get the same type of crash. I know in Maryland we joke that it's, it's 40 this week, but next week we'll have 2 days where we'll have a high of 75. It's just how it works out in Maryland. So Mother Nature gets a little confused sometimes. But anyway, we'll end on that. We'll do gold, silver, and oil. And again, what we'll do in that last commodity section, I know it's not a commodity, but because of the inflation scenario, when we're talking about gold, I do want to mention, and again, we'll bring up Bitcoin, just because it's, kind of has been the inflationary play, and it's been kind of on the same battle page as gold, but we're seeing different things happen now. So I want to make sure that we bring it up. And remember, those Wall Street bet guys are saying $100,000 and $100, and I don't think we're going to make it. So we'll see what the charts are looking like. And yes, I still have this cough. It's driving me crazy. It's here. This is week 2. Almost everybody I know has it in some sense of the matter. The doctor's like, yeah, real bugs exist besides COVID. Like, we all forgot that you could still actually get sick with just regular things like normal stuff. And yeah, my whole family's over here coughing, the little one included. But feel fine, just this cough. So if I cough in your ear today, guys, I do apologize. I'm not doing it on purpose. It's just I can't help it, even with a cough drop in my mouth. So, but I do feel fine. Everybody's like, are you feeling better? Like, yeah, I feel great. Just cough, fun. All right, let's dive over and go right into the charts. All right, so what we're looking at first here is the VIX. Actually, you know what? Before they do that, let's go over and let's talk about before we start with the volatility, let's talk about what the news looked like today. So many of you probably already know, we started off with a bang today. Retail sales blew it out of the water. Forecast was supposed to be 1, came in at 0.7. Core and retail, just amazing. Industrial production month over month, also great. That was one of those ones that kind of helped at the open today. So, and Yellen says inflation might. Oh, I don't even know why she's around anymore. Lace. U.S. Treasury Secretary Yellen, inflation might subside by H2 2022. Before it was 2 months. Now she's saying it might subside by next year. Might, because that's what we want from the U.S. Treasury Secretary, is more indecision, right? Anyway, so no additional news today. You can see across the board we got pretty nice movement in the currency market. Euro is just getting slammed. Euro pound down 54, pound yen up 78. Can go much higher than that. Dollar Swiss up 75. I mean, again, this is just dollar strength across the board. Why? Why dollar strength across the board? Because retail sales is so high, right? Again, that's an interest rate story. Now, tomorrow, okay, tomorrow we have quite a few things to talk about. First thing is the pound CPI year over year, expected to go up to 3.9. Okay. All the employment data we saw today was great. They said basically because of this, because the data is so good, there's going to be an interest rate raise in December. Pretty much guaranteed is what they're saying. Seeing the CPI year over year at 3.9, this could be a huge opportunity. So it is super early in the morning or super late at night. It's at 2 a.m. Eastern Standard Time. So again, you West Coasters, it's 11 p.m. You can trade it. This could be a nice little market mover, right? Again, raising interest rates is a huge boom towards the currency. This one, again, year over year, nobody wants 4% inflation a year. Nobody. Only way to kind of protect it is to get that interest rate. So again, could be some good opportunity for that one. Then ECB stability report, 8:30 tomorrow morning. We have CPI month over month for the CAD. Now, all of it's expected to be kind of in line, minus just the regular CPI, the common, medium, trim. Don't have to know what those are. They're all about the same, but the regular just kind of the grand kind of all of the combined, supposed to be 0.7. It is a higher number. I expect Canada to do some raising as well. Canada's doing quite well, so I think that they are at the stage now where we're going to start talking about Canada rising. Now, what does that do? This is where currencies gets interesting, because right now we're at the strong everybody. So it's strong versus strong. It's the question is, how much power can they generate by having a high CPI? And if we're going to raise interest rates in Canada, which they're probably due to as well, how much can that give us tomorrow? Now, there is no conflicting U.S.-based data. So tomorrow in particular at 8:30 in the morning, before we get on, you should be going over and looking at dollar CAD. Currency people should be looking at dollar yen. Nadex people should be looking at dollar CAD. Now, the big question, and I don't know this answer yet because it's not tomorrow morning, is how much premium is going to be baked into the options? How wide is the bid-ask spread going to be? Again, that's a Nadex thing based off volatility, but it's something you're going to have to check in the morning. I can't give you the answer today because I don't know, right? This could be a nice release. Okay, again, that number comes in higher, 1.1, even 0.9. Dollar CAD should take a drop to the downside because that'll be Canadian strength coming into the market. So again, short duration binary contract, call spreads, maybe even a knockout. We'll see where it moves. And then we have a bunch of speeches. We have Williams speaking, we have Evans speaking, and we have Crude Oil Inventories. Now, crude oil has been not as volatile as it has been lately, right? It's not really kind of at its highs. But right now, again, we know what the previous was. It was another surplus. Supposedly we're out of oil, but yet, I don't know, what, 1, 2, 3, 4? 4 out of the last 5 all show an increase in supply. Now, I don't know where everybody else, where everybody lives on here. I do know that gas prices, our normal gas stations around where I live right now are $3.40. And then like Sam's Clubs and the big superstores that have the gas station out front, those are $3.18, $3.20-ish. Okay. Should start to head down a little bit. Like I said, the numbers all look great, but everybody's starting to produce a little bit more, right? Slowly, the supply cuts are kind of disappearing. Should help, but again, crude oil should be an interesting with that 3-5-1 strategy tomorrow morning. I think that'll be a decent, because there's not a whole lot of U.S.-based data, I think that'll be good. But Williams is speaking, Evans is speaking, and then tomorrow night we have New Zealand inflation expectations. We'll see what that one comes in. We're not really trading New Zealand, but again, it can be traded through the Aussie, right, as a proxy. But that's tomorrow night. Remember, Australia has already raised their interest rates once. So the inflation expectations, you may look at that and say, well, 2.7 doesn't seem that bad. They've already raised their interest rates once. Okay. Again, you see this 3.9, they haven't raised their interest rates yet. These guys have already raised it once, and it's still not kind of where it needs to be. It just shows how bad we do need it. And then we have Thursday. So Thursday is an interesting morning. We have Williams, we have Evans speaking again. We have that Philly Fed Manufacturing Index. Manufacturing blew it out today, right? Unemployment claims back down at 260, which again is like it's like nothing, right? Why manufacturing is important is because manufacturers tend to get a gauge of what people want and what demand looks like. The more that this increases, right, the better sign that is of the future we have to come. Retail sales being great means that these guys need to produce more goods and services for us to, digest. If there are these bottlenecks, and again, Walmart said they don't really have bottlenecks because they just hired their own shippers, right? The more we produce in the United States, there is no bottleneck for that. I have a friend, and I mentioned it yesterday, who's a manufacturer. He has a clothing company, like a sports clothing company. He's like, we have no supply chain issues. We buy the cotton from in North Carolina. We bring it up here. We have our looms, our weaves. We do everything here, and then it ships out. Nothing has changed for us. And he's like, buy American. Um, that was his like kind of that was his kind of pitch. I'm like, I guess it's true. If you're not sending things overseas, there's no delays because the factories are here and open. So again, our manufacturer is producing a lot more stuff, means that we got a lot more stuff to buy, which again trickles down to a little bit everywhere. So again, manufacturing could be between manufacturing and unemployment. That could give us the insight into Thursday about which way the market's going to move in preparation for Friday. Now, Friday, we have retail sales, and again, expected to be a good number with the pound. But by that time, we probably had enough good pound news. I don't know if it continue to keep moving at the same rate. ECB president is speaking. Great, here we go. Turkey on the verge of currency collapse as the lira implodes, crashes 4% in minutes. Yep. Then we have Cad Retail Sales. Now, retail sales in Canada are expected to be down. This is a great trading opportunity on Friday. And here's the reason why. Everybody else seems like they're blowing retail sales out. Canada's supposed to be negative. I mean, they did really well last time, but the market is already prepared for a bad reading. If they come in flat, that technically is a beat to the top side. Or if it only comes in at maybe minus 0.5, right? That's a beat. That means that the Canadian dollar will get some strength, right? That means things like the dollar CAD should shoot down at 8:30 in the morning, okay? Kind of one of those little hidden releases on Friday. And again, we don't really have any big U.S. news. We have Waller, Clarita, and, obviously ECB speaking again, and then our currency treasury report. So couple dollar CAD releases, which we don't really see, right? Couple different retail sales. Obviously no like monetary policy big statements this week, but we kind of know where everybody's going with this is December is the month. Like at this point, I can only assume that hedge funds and money managers, I'm assuming that they want out December 1st. I don't know if you guys know this or not, but a lot of these guys close their books early December and then take the rest of the month off. So that way they have their gains locked in, right? So they don't have to mess with any volatility or anything like that during the holiday season. If you think about it, that's not not a dumb thing to do this year, right? If we know December is the time when everybody's going to start raising interest rates, that's when the associated market crash comes with the interest rates. If you lock yourself in December, the early December, before those things happen, you may have hit the peak of the market this year. So again, it's kind of interesting how it's all kind of coming to the hilt right at like Santa Claus time, right? End of the middle to the end of the month. It's when everybody's talking about QE is done, which again, QE is probably tapered in the market. But those interest rate rises, very interesting scenario. In the next 2 months, it seems like everybody's going to be pulling the trigger on that one. So much opportunity, right? And again, this week we'll see. Here's the Center of Financial Stability economic event, Asian economic policy event, and then again talking about speaking at a reception. So lot of stuff going on. All right, let's start with the VIX first. Okay, again, we're not trading the VIX over on Nadex, but we are using the VIX to determine which way markets are going to move. Typically, when the VIX is going down, and it is down 1.58%, it generates the markets to go higher. Why? Because the volatility is gone. There's not any problems out there. And again, where we're sitting right now, you can see there was some sellers up top. And again, VIX is a product that you can use or you trade off of Nadex, just you're not doing it on Nadex. But again, it tells us and kind of gives us a foreshadow of what should be happening in all the indices. Now, it's an interesting spot. If this was you just handed me this chart and didn't tell me what it was, and again, at the end of the day, it doesn't really matter. Looking at this area right here, I would say, hey, look, levels we're basing here. There's some buyers down here. It came down and then it stopped and it gapped back up again. It's coming here. And I look to the left, I see all this. It's like, there's nothing in here. And I would be looking for targets down to this level. Now, again, I'm not selling the VIX, but what I am looking at here is basically saying there's nothing that really stops us from coming back down to that 1517 level. With this coming down to 1517, the volatility, again, the kind of the anxiety index, as I like to call it, with this dropping down, these all should continue to rise. They should all sit there and stay in the green. Now, typically you don't see the dollar index, and again, it makes complete sense why the dollar index is moving. Again, the same technical setup. There was your level of basing, there was your pullback and hit, and boom, it took off. Again, it's going higher because of retail sales. Why retail sales? Well, retail sales blew it out. We know inflation is high. People are spending a ton of money. People are getting paid more money. Again, the only way to stop that is to, again, raise interest rates, which also makes the dollar more powerful, gives it more buying power, makes people want it more often. And again, that continues to send it higher. Okay. Now, let's dive into indices, and we're going to drop this down to a 15-minute chart. So, open was a little bit rocky, right? The open kind of pulled us back, right? And when you're looking at this, you say, hey, listen, we had a level right here. And this candle right here is the open. Right. There's the 915. There's the 930 right there. So when you look at this, you can say, well, wait a second. We pulled back into a level right there. And again, it would be a buy because, again, we pulled back into it. It was a little bit lower than us. This is a great trade opportunity at the open, right? And we go here. We put our risk on. And 1 to 3 is sitting right there. So you can see, not only did we break through the 1 to 3, we've actually ridden this one all the way up to about a 1 to 6.6. So again, monster trade at the open today. Now, this is great news. And again, a lot of this also today probably got helped with that, the additional data, the manufacturing that we had, right? The industrial production, that being so high probably helped us. This is a raising interest rate story. Great that everybody's spending money, right? But they're going to, seeing this is what happened in the past. This is kind of like earnings, but also raising interest rates sooner. Seeing industrial production increasing that much, that's good. That's a good sign, right? Again, that's very, very positive for many stocks out there, because if they're producing more, they're expecting us to consume it. Okay. So again, that probably gave us that push higher. And again, we're sitting up at a level right now where I'd say, be a little cautious, right? We're at 4,700, right? We've been there in the past before, and price has been turned around. We got a little bit more room to go, but I would say right now, 1725 is probably the overall target to hit this week, particularly because with the VIX dropping, again, these should continue to go higher. And in reality, I wouldn't say there's anything earth-shattering, majoring news-wise that we'd really need to watch out for. There's not like an FOMC statement or anything like that says, yeah, we're going to start taper. Taper's going to finish next. We don't really have any of those things. So I think that could provide some good potential. But again, your opening trade setup today would have been this, as it pulled back right into a level of basing that we'd saw a prior pop from, and boom, off to the races up to 4,700. I think there'll be some profit taking, although I don't think we're getting negative today. There'd have to be some major blockbuster headline. I just, I don't think we're going to get anything like that today, or in the next couple of days. Really, the only thing I think at this point that can really start slowing us down would be a natural disaster or some statement. Even with Bullard speaking today, making comments that, even if Powell is not there and it's going to be Bernard, we should have continuality, because she's been in agreement with what he's been doing, which is funny because the biggest reason to keep Powell in his position is for the continuality, so we don't change in the middle of a crisis. But then when you talk about her, everyone's like, oh, we'll have continuality with her in there. It's like, well, if it's going to be the same path, why would you replace them? But that's what we're hearing right now. So anyway, I don't think this derails. I think the next thing we shoot for is the 47.25. Maybe a little bit of basing, and maybe we'll get a pop off of it. But again, there was your opening trade today. NQ kind of had a similar feature, right? Right around here was the 915 candle. Went a little bit lower. Again, this is one of those ones that futures traders hate. They're like, oh, look at this. Oh, no. Boom, they got stopped out and it was off to the races. Now, we can take this one off. We don't need that anymore. We did have a Harry Potter yesterday. We talked about it dropping and coming below the 155, and it did. It drove all the way to the profit target. You would have had to grab that one pretty quickly, and it did come up later on in the day, but at 1 o'clock, you're not going to enter that trade. And again, market basically closed right here. So, one of those things. We were looking for it to go short. We were looking for it to come all the way down, and it did. We were looking for it to break 16,100. It did. It went actually as low as 16,081 before kind of rallying back up again. Interesting enough, it did grab the sellers here, but again, this was late at night, so not necessarily the best trade setup. But now we have punched through. Now we're through the top, and our next really target where we have sellers. And again, you guys remember what this is called, right? This is the racetrack, right? Price is now above this line. We knew there was going to be a little bit of a hiccup, which again, the hiccup happened over here yesterday. And we kind of used that hiccup as a launching point right now. We don't really have a whole lot stopping us, right? On a purely technical based look, there's nothing. So again, are we clear up to 16,359? Probably. Based off of a chart on a 15 minutes, there's nobody stopping us right now until we get up to that level. Could we sell off of that one? Sure, it's a potential. It's not super fresh, right? We pushed it to the brink here. We pushed it all the way up, pushed it high again, and we actually may want to actually, if we're using it as an entry zone, you may want to kind of shrink it a little bit. But, as far as profit targets and things like that, 16,360 is probably where you'd be looking, the top of this body right here. Okay, so we got smooth sailing right now for the NQ. Not really a whole lot stopping it. I do think it goes higher. And if I had to say where we're going to, I would say, based off the week that we're having and kind of the news that we're seeing and the data we're seeing everywhere, I think 16,500. Again, I think this is could be in the works. Again, huge psychological number, 16 and a half. Gotta love that. On the way to 17,000. Again, I do think a lot of this starts to come crashing down once we have specifics about the interest rates. The one thing that I'm wondering right now is that first interest rate hike, 0.25 is pretty much your standard. I'm wondering at this point if it may be a 0.5 because everybody knows how horrible inflation really is. Question is, do you spread it out? It's kind of like, do you pull the Band-Aid off slowly or do you just rip it off? With the data being as good as it is and the inflation being as high as it is, if you do a 0.5 raise, it may actually not, we may not need another one until maybe the end of next year. Maybe we don't need one at all, right? Maybe that halts us enough, and because it's a one-time hit, right, instead of a couple small repeated, jabs, it may work out a little bit better. So we'll see. I think that'll be a big reaction. And again, we'll see how big the market swings are. But right now, I think this thing comes up. We look at the 16,360. We look to see some basing. We may get a confirmation kind of short on that one. And again, if the market pulls back, not the end of the world. But I think 16 and a half is kind of where the target is for the week. YM, you can see that this one loves. I mean, this one ended up coming a bit lower. It for some reason, 36,000, it's not a big fan of it. It likes this level just a little bit lower. You can see it based here, hit here, hit here, hit here, hit here again. Kind of sliced up, and again, it kind of got fearful, right? It based, it kind of chopped back and forth around the 36,100. As you can see here, turn it away, came up, grabbed the 36,200, came back down, hovered around the 36,100, came back up, and now we're at the 36,200 all over again. I would say right now, I mean, looking at this, we know we have some sellers, but really we've already kind of broken through. We've put 2 jabs in. I think we have, we got a little bit of a hiccup here maybe, but I think we have smooth sailing. I think 36,300. And in reality, I got a little bit in here. I'm wondering if we can get potentially to, what day is that one? Inflation, Williams. Philly Fed is on Thursday. I'm wondering if we can get through. It's really like kind of right. It's kind of like there. If we can get through this level, let's go long. Just not that one. It's like, why is it not giving the right reading? 2.630 is right there. Oh, it's right there. This is what I was wondering to see if we could hit. 36 and a half. So it looks like if we do have a break, it looks like we do have enough room for this one to run. So a break at 36,338, and again, use your platform to figure it out. Again, that gives us about 38 points to kind of bounce above this level. And again, I think that's worthwhile because you can see the basing here, and it hit and pulled, hit and pulled, hit and pulled. So again, we're at 3 already. This was a decent one. And again, that's absolutely a line. And 36,300 is absolutely a price that we could see a pullback from. But if we can break through, we got a lot of room to run. It's about a 200-point runner all the way up to 36.5, and that could be something by the end of the week we get up that high. So could also be a decent trade setup. The Russell. So Russell took it on the chops today. Now the Russell is always going to be more sensitive because raising interest rates doesn't hurt big companies as much as it hurts little companies. This one was pretty choppy, right? Here's your opening candle. It was up, down, up, down, up, down, up, kind of base, and now it's finally starting to go higher. Excuse me. Overall, I think this one has the ability to go much, much higher. It is the laggard right now in any type of pullback situation. It is the weakest. And again, a lot of that is because, again, we're going to raise interest rates. It's going to hurt small business the worst. It always hurts the small guy first. There are not many things on a financial basis that are great for the little guy. Raising interest rates is definitely not one of them. So right now, I would say potential trade setup right here. This could be something for later on this afternoon. Little hiccup right here in the middle, right? Little hiccup, but little hiccup right there. But we do have some clearance. So yeah, I would say, look for this one to come up. I think for this week, we know that the area up here around 2430-ish has been an issue. Let me see here. One sec. Here may be the reversal of that. Because again, you'll have fib traders stepping in here from this push. They'll come in at the 50, get out at the 61.8. There is a level in there, so we don't need to take the entire risk on it. 24.22. So we got a little bit of a long, little Harry Potter for today, and then again, this 24.22, if we can get all the way back up top again, could be a reversal. And again, it's playing kind of the fibs. It's kind of dealing with this. It's just going a little bit higher and taking the new level from it. And also, we got a little bit of a backstop right there. So that could be an interesting level to watch out for tomorrow. All right. Let's go down and cover currency. So currency is a little bit all over the place. So yesterday, actually starting last week, we mentioned that, what we've seen is basically some dollar weakness, right, coming to the market on Sunday nights. And we saw that, right, on the 14th. We saw dollar weakness coming. Here's the 12th. Here's the 14th. So here up until right here, right, from here. Let's see. I'll draw it from there to there was the Sunday night session. And we talked about dollar weakness. And that's how we started off the week with basically the scenario that when the U.S. trader stepped on Monday morning, we would see dollar strength. Well, that's exactly what it did. It came up, it found that level of sellers, and since that time it has dropped. It kind of pulled back, gave us a second entry, and is now all the way past. So had you been following last week on Thursday, you would have been able to grab this one and figure out where this was. You could have taken it off of Sunday night trading as well. If you guys were going to, use kind of smaller levels, again, there's your Sunday night entry. Went well beyond its 1 to 3 as well. With the way that it's dropping, with the retail sales number, there is going to be a little bit of a kind of a slowing, a little grinding going through this level. But if we can push all the way back down again, and again, it seems like it's going to be a week of dollar strength this week. 72.77 is the first time I'd be looking for some type of reversal type scenario. It's a little bit late to get short now. I mean, you're about 3/4 of the way through the move. But love this one. And this is what we talked about last week. This has been a recurring trend every single week. So again, if this is your golden nugget, write it down. Sunday night, we tend to see dollar weakness, and then the U.S. trader steps in, and we tend to see dollar strength. And it's kind of repeatable. It's been happening again and again and again and again. All right, so look for this one. But again, I do think we start to slow down a little bit, maybe some profit taking. I don't think. Let me see here. Hold on. Aussie. Speaks wage pricing. No real blockbuster news for the Aussie at all this week. So again, it's going to really be kind of at the mercy of the U.S., right? At the mercy of the U.S. So yeah, we'll see. Aussie yen. All right. So Aussie yen didn't quite go as high as we wanted. One of the things, and again, let me change this to a 30-minute. One of the things that becomes glaring with the Aussie is it really spent a lot of time right here at this 83.85 number. Now, I'm looking for nice explosive candles to be able to get in. There's a little grindy in here. This is not really great. This is okay right here, and that's probably what that bounced off of. There's probably something sitting right in there, right? I'll turn that green because it's below. But really, until we get down to this 83 mark, right? Can I get it right on? No. Until we get to the 83, there's not really an explosive movement. There's okay movement right here, and this was a little news-based burst, but look how much time it spent there, right? It spent over a day there. Yeah, a day is from there to there. So it's been a day and a half there. Not really the best of levels. So kind of the same thinking. Obviously, this one is getting powered by the yen right now. I would be more in kind of a bearish mindset in it. Don't necessarily have a great trade setup. There's a little bit too many wicks for me. Spent a lot of time in this zone right here. It really likes that zone, but I would say that the next clean level with potential buying would be 83.43, and then really coming all the way down to coming down to this 83 mark. I think is really the next kind of the next big level. So two targets, and again, if you are short and you are able to get an entry on this one, there could be an argument made that there's your Harry Potter based trade. Right? Right there going short. Again, based, popped, tested, hit it again, hit it and based on the top, which means typically it breaks. And now we're coming through and basing. So there may be a potential short setup here if you're looking to get into something with the Aussie yen. Let's see, do we have enough room? Yes, we do. There's 1 to 3, which again, a little bit far here, but I think this is going to be the bigger pop. So yep, there's a potential trade setup for the Aussie yen. Euro pound. All right, so yesterday morning we were sitting here. I mentioned this in the Nadex presentation yesterday morning as well as with my group. We were sitting right below this level. Again, we were looking for that base. We knew we had a racetrack scenario. If we got the break, we wanted to get in. We dropped. We kind of based with this green candle. We came back up and touched and then collapsed. It also started to form another base and gave us a nice little bounce, right? Nice little kind of shoot down. Now, it did hit the zone. It was a zone that we had marked off, but it wasn't really a zone that I was willing to get long from. What we did do is we took a pop off of it, we hit it again, and now we're coming in on a third time. So the area is basically gone, so we're going to use this old area as our new level. We're kind of getting ready to break right now, and again, I think this is another trade that we're going to see this week, is basically a break of 84.33. Again, getting that little Harry Potter break below pullback. We'll look for this to drop down to 84.06 or 84.07-ish area, which again is beyond, you can see right here, the white. It's below the 1 to 3 risk to reward ratio, your trade setup. Okay. And again, decent trade setup. This one is not a lot of risk. It's only about 8.5 pip, target. Again, the euro pound has a very, very small ATR. I think it's increasing now. Now it's still at 45 pips. So although this chart looks, like super juicy, you're like, oh, look at this. This chart is amazing. Look at this. It's amazing. It's not. I love to say that these are all like 125 pips, but they're not. It's a very refined area. So remember, when you have smaller targets on this one, it does give you the ability to position size a little bit differently. I know that doesn't help you out as much in Nadex because it's a per contract basis, but remember what position sizing is. If you have smaller risk, right? Smaller risk means you can take a larger position and still risk the same amount on your account size. So not the end of the world. You don't need as much movement out of it. There's a higher probability in it. There's a lot of different reasons to do it. But just something to, again, something to kind of keep your, your focus on. All right. Euro yen. Euro yen is doing the same exact thing. There's a level of basing. It was a decent long. Again, it's kind of chopping back and forth. We were kind of sitting yesterday. We were sitting right in here, actually 12. We were sitting right here yesterday. So this is probably, I don't have it on the screen, but we're basically at the same place we were yesterday. But we did find a base. And again, there was another position. I don't think this one was a huge, it's only about 30. You probably could have taken this one long. Let's see. It's going to be close. 3.83 up. There you go. 3.1 is right there. So yeah, there was a trade. It was super early in the morning though. This one actually triggered at that 5:30 reversal time. Remember, for those of you that are following, 10:30, between 10 and 10:30 is the most common reversal time. The European reversal tends to be at 5:30 in the morning. Between 5 and 5:30 seems to be the sweet spot. All right. not much else we can say with this one. This area's been hit. Let me see. Yeah, we're kind of sitting in that racetrack. Let me see if I can really dial it in and see if there's any potential in this one. Yeah, look, we're in a racetrack right there. So yeah, I guess it does. Can I see it on the 30? Yes, I can. Yeah, you can see what it's basing off of right now. Yeah, it's not bad. So it looks like we can go all the way down to 129.10. So again, that one is kind of out. There was our morning trade. Let's see if we can get our afternoon trade now. 1 to 3. When I say 129.30, and we are clean until that. There we go. Change that green, change that black. There you go. All right, euro dollar. So euro dollar just broke through a level. Really on the euro dollar, I have 2 levels below that I'm interested in that are clean. We got a little bit of a hiccup right here. You can see 113.03 to 112.94. Again, psychological whole number. That's probably why we had the hiccup on it. I don't think we'd see that on the 30. Nah, it's been forever. This is basically a 4-hour level. And I would say it's a 4-hour hiccup. I don't see it really slowing down much until we hit that level. It's not really a level that I'm looking to get long from, and then we run into kind of a little bit of a rough patch. I think both of these levels. Hold on, I thought I was going to cough and I tried to stop it. Hold on. Whew, that was almost a coughing spurt. I don't really like much until 122.44. And again, I know we're a little bit far away from these right now, but we're talking about 80 pips. It's probably more than 1 day's worth of movement. If we can get a decent pullback in this one, I think getting short as well is good. We already know the schedule for the European Union. Lagarde is speaking a few different times this week, but remember, they did the strategic allocation of quantitative easing. So they didn't technically taper. They just took the funds from where they didn't think needed it to where they did think they needed it. So that's supposed to end in December, right? But I think they still have some other problems that they're dealing with: inflation, supply chain issues, not being able to get natural gas, right? The Belarus situation with Russia. I think the dollar is much more on path to be strong. So if you can get a decent pullback, I think any of these work. If you're not sure how to get into kind of pullback scenarios, there's a number of them. I mean, obviously, this is one that we should have grabbed right here on the way down. Some people will be looking at this and say, okay, I'm waiting for a pullback. I'm going to wait for, the next pullback of the 23.6, or in this case, it looked like it was a 50, but, people are looking for the different pullbacks at the different levels, right? They'll grab the first one. Number of different ways to do it. That's one of them. You can use the red, green, red like I use, the confirmation. But I think getting short the euro dollar, I think is, probably a good idea this week, at least until we get down to these 2 lower levels. And then I think we can see potential buying coming back in. Pound yen, as great as the pound data has been, it has been quite choppy back and forth, right? Right now, we're up 75 in the last 24 hours, or 86. It is below a daily ATR right now. This was a level that it was okay. We marked it off. We were really looking for the break of it, but you can see there was a level here and it hit it, it hit it, it hit it, it hit it again, got front run, came up, and then kind of is basing in it right now. So if anything, I would say that, I like this racetrack right here. I don't think we'll have a whole lot really kind of messing with us until we come up here to this 155.27, right? That 155.27 is more of a target for longs, right? It's more of the target, the ending time frame. So like I said, it's kind of, for me right now, this one is really about just finding an entry. We know that this is a very popular area of interest. Coinciding this with other pound data, I think, is important. I mentioned that there is pound news tomorrow.
Hey, Brian, I'm sorry for interrupting quickly.
Yep.
But we got the question. You mentioned a racetrack. If you could just define that, and then keep going. I apologize. I'll step back out.
Yeah. Interrupted me. No, I'm just kidding. Todd's been doing this long enough, he could probably answer it. But basically, guys, what I mean is normally when you see movement, you see something like this, right? Where you have green and red, you have impulses and corrections and impulses and corrections and impulses, correction, and impulses, corrections. But every so often you have something that, again, where there's no pullbacks, right? You see something like this. And this is really kind of what it looks like, right? It's just one solid candle up, and then the next candle starts. There's no wick. It goes straight up, and it basically closes at the high. And then it goes over. There's almost no wick, and it closes high. There's no pullbacks in here. It doesn't do like this is a normal right here. This is a normal drop, right? Impulse, flat, impulse, correction, impulse, flat, impulse, correction, impulse, correction, impulse, correction. There's a lot of buyers and sellers in here. There's a battle, right? Buyers and sellers step in. Buyers and sellers step in. Well, the scenario we have right here with this racetrack, and when I say racetrack, what that is it's basically generated by massive amounts of movement. And you can see when you look in here, yeah, there are a few wicks in the back, but basically, we had this impulse, correction, flat, 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 boom, 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 without any pullbacks in there, right? I mean, if I bring this to an hourly, do you see how there's like nothing? It's one big bar down, a little bit of a hiccup, and then another bar down, and there's no wick, and then another bar down, and there's no wick. There's a little pullback right there, so I know there's something. It's not ideal, but a racetrack is basically where there's no pullbacks whatsoever. Okay. The reason that is important, and again, I'll bring this down to like a 15 minutes so you can kind of see what it looks like on the smaller time frame, right? When you see something like this, when price came down, you know that there was no more, the buyers basically stepped in. How do I know? Because price went up. If there was no buyers to save this, the price would have continued to fall. But buyers stepped in, and then sellers stepped in again. And then it pulled higher to grab more orders to finally push down again. The lower time frame you go on, it's obvious you can find these like kind of smaller areas, but eventually you have to draw on a line in the sand somewhere and be like, hey, listen, no. But what this shows me is there's not really a whole lot of great selling pressure inside of that area. So what it means to me is without a decent pullback and a base, right, and another big push to the downside, it should be able to go through this level without too much of a problem, right? So basically, a racetrack is in, like how two cars line up against each other on the quarter mile, and it's just a straight track. It's not NASCAR where they just do nothing but like turn left, right? It's basically like a drag strip, right? You're waiting for price to literally take off and run there as fast as it possibly can. So hopefully that I didn't come up with the terminology. Actually, a close friend of mine, it's actually he's the one that kind of crafted the title, and I took it from him. But it's the same thing: drag strip, race trip, same idea, right? Basically, that there are no buyers and sellers in that area. That price should be able to kind of launch itself from here all the way up without too many sellers. So hopefully that answers your question. All right. So that's it. I think that one can go up. Pound dollar is kind of in a strange area. This one's literally like back and forth. I don't remember what this one was set up on. I'm not sure why I drew this one. I'm really not sure why that one was drawn there. I feel like that one got drugged from somewhere else. It's kind of like in the middle. It's like in no man's land. It's kind of in the middle of nowhere. Anyway, basically what we're looking for this one is, I would say right now, as much as I love the pound, that I'm all about the sterling right now, right? I'm going to have to go in the same pool. The retail sales number is too big. The United States is going to raise. Put it this way, you don't replace Powell with Bernard and then basically like, we're going to do nothing. Yeah. So she comes in, it's kind of like, when are we raising interest rates? That's all dollar strength. I would say, if anything, there's probably a racetrack sitting right here. Not a racetrack, a Harry Potter on this one. I love how this is set like this, where the wicks are lower. There's a little hiccup here, but I would say that there's probably a short base trade sitting in here. Again, we need to have that close below. Obviously, the European market is closed. The 1 to 3 is right kind of where the last big set of buyers stepped in at 133.56. So again, don't know when it's going to happen. It may hit this level and decide it wants to bounce all the way up. But I like the 135.29 area, and then again, I like these two areas below. Obviously, the 133.11 is more of a buy. It's solid. This one went off of it pretty decently, but it didn't do it in like an explosive manner. So I would say it's great for picking a target. And again, if you do use this to get short from this level here, on the flip side, this would be where your target is, right? There would be your target to the downside. Okay. Now, dollar CAD. I mentioned dollar CAD a few times. So dollar CAD just recently got out of its trade. It just hit it. It went like a couple pips past its 1 to 3 target. So that one was officially out. And again, I believe this was a 4-hour. Yeah, I believe that was a 4-hour setup. Basically, what we're doing this one is there was a 50% retracement level after this big push down on the 4-hour. When you dialed in, you could see that, hey, listen, there's a level of basing sitting right in there. And that's the level of basing that it hit. You're able to kind of absorb it and look at it more on the smaller time frames. And you can see it, it never broke through, and it continued to push lower. So it is out. It's official. Again, it was quite, this one is what, 80 pips on that one. We're approaching that level again. And again, I'd use it a little bit differently this time. Right. Now what I would do is I would say, listen, I still know I have the 50 sitting up there, but I do have a top in here that is tested. It came down, it came back up, it hit it, and then exploded out. I would say there is probably another short here, and I do like the short. Right here, you see the Canadian news for tomorrow. Kind of looking for this as a potential setup, right? Looking for this to come up and test, and then again, I mentioned it earlier, okay? Tomorrow, with CAD, boom, tomorrow, CPI. This CPI is good or blows it even farther out, 1.0, that's CAD strength. If price from now till then runs up, we know that we have the news right here, all the CPI. That would give us CAD strength, which would take the dollar CAD being the second position, and shoot us back to the downside. Is kind of what we're looking for. All right. That level is, let's see, approximately, whoops. There you go, 125.97 to 125.66. And could this run farther? This is an okay level. Again, you could always use 2 profit targets. If it just slowly grinds itself up without any like explosive candles, you could always say that your profit target 1 is there, and then profit target 2 would be sitting down here. Right, kind of right even with this level would be your profit target number 2. Something along the lines there, right? If you want to extend it a little bit more. All right. And again, that's why we talk about news, because something like this where we have Canadian news, and when I click all, you can see that there's nothing else happening at 8:30. There's no US based news at that time. Perfect opportunity for us to trade the CAD. The way we do it at Nadex is with dollar CAD. We know we have a level. We know that on a higher time frame level, we know that that level right there between the green and the blue is also the 50% retracement level. So it is a larger time frame, 4-hour based fib level with a supply zone that has already been turned around once, and all we did was we lowered our risk. We're taking advantage of the market saying that, hey, listen, the Canadian dollar probably going down because, again, we're going to see Canadian strength because CPI has been blowing it out of the water. So we'll see how it works out. Okay. Dollar Swiss is going. It's going. Now, there's some levels here. This level's been hit multiple times. It wasn't one that we were willing to take it short from. We left it on there from back here, but you can see here, 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 here. And we did actually have a long that we're looking to go through. Looks like that level was right here. We had called this kind of Harry Potter trade a while ago. Let me extend it across. I don't think. Yeah, we're kind of in there right now. But basically, we were looking for a punch through this level to ride all the way up. So it's hard to tell much from that. Yeah, that's the next time we have some sellers coming in. So yeah, it's taken an old level. Let's see. Ooh, what I don't like about it is we have a base along the top of it. That one's hard. That one's hard. I like this one more up here. I like that one more up here. That's the 1 at 2.9. We're going to need to go through the level, though. That's the base there. Let's see, where's the next base? Okay, we do have enough room for that one. So basically looking for a break. Break of 93.13. We're looking at a target of 93.34. Again, not very big. It's only about 20 pips on that one, so maybe not worth even taking the trade. And there's going to be a little hiccup right here in the middle. So I would say right now, I have nothing to believe that this one is going to slow down. I do feel that this one will continue to progress this week. Do I have a great entry on it? I mean, is it worth taking, tiny risk for 20 pips? Maybe for some. Unfortunately, the smaller the trade setup, while it does make sense in spot currency, it doesn't always make sense with Nadex because we have strike differentials and things like that. 20 may be a little bit too small in this one. But I would say overall, I think being bullish this one is good. I do think it continues to move, and I don't really have any sell targets on this one until we're up here into the 93.85 region. Dollar yen. So, dollar yen. Again, racetrack. Waiting for this one to come in has not happened. I love that it keeps riding along there. I'm totally cool with that. Eventually, it's an if this, then that. When it eventually gets there, we're looking to take this one short. Again, dollar yen. Is it one you want to step in front of? Not really, right? I mean, again, we know that dollar strength is coming in. Most things look pretty good at this point. Not a lot of reason to get short this one, right? I do think this has the ability to run much higher. I don't really, like I said, we have an area right here, which we've already kind of bounced off of at one time, but I love the way that it formed the base, so we can look forward to go even higher than that. I mean, how high? I mean, let's see. I mean, this is kind of what we're dealing with, right? On a daily basis. Look, not clean. 1 hit, 2 hits, 3 hits, 4 hits. God, can we get back up to the 1800s? I think 1700 would be the next big major milestone on this one. But I mean, in reality, we get up to 1550. That's where all these tested levels come in. I guess there could be a case made about that level. Yeah, I mean, I'm on a daily right now. There could be an argument made for this level right here, from here to here. And again, we're talking about like a 70 pip stop loss. Nothing that we're willing to trade, but just understanding that on the larger scheme, yeah, we're running into some selling, but I just think right now the US is going to be too strong. It's not a fresh level, been tested multiple times. I think we come back up again. I don't want to make any crazy wild claims that, again, end of the year, it's at 117, right? I mean, yeah, I guess it could be up there. Could we be at 118 by the end of the year? Probably. I'll tell you right now, if Powell gets replaced with somebody else, then yeah, we'll probably be at 118 by the end of the year. But right now, as far as what we can trade on an intraday basis, it's got to dive in. This is so far back. This is March 2017. I'm not going to be able to look at this on a smaller time frame and get some decent analysis in there. So, I would say right now, again, I would be looking for long opportunities. If we do get a nice little turnaround and pullback from this level, though, again, that gives us a more near-term ability to, add some decent level risk. Otherwise, it's going to be way too big. All right, let's switch over and cover oil. So oil is going to have inventory tomorrow. Oil literally is now retraced all the way back. So we opened the U.S. session here, and we're basically in the same spot. Kind of the same thing. We opened here, closed here in the European session. Don't forget, later on this afternoon, the API inventory report comes out. That'll give us kind of a foreshadowing of what tomorrow looks like. Remember, it's an industry reported report, not an official one, so it can be wildly different. But right now, I would say where oil's sitting, again, we've seen a number of different sellers coming into this level before, particularly up in that area, and we're getting kind of close. I wouldn't be surprised if oil kind of peters out. Watch this one and see what it does in the overnight, especially after that API report comes out. I think that'll make a big deal. But if anything, I would say if I had to pick it on a purely technical basis, and if you told me this was just a stock and to analyze it, I would say I'm probably more willing to take this short. I mean, it's it had some basing. I don't like how much it based, but it came down, it came back up, and then boom, it exploded off when the major market opened. And yeah, it's rallied back up again. But I would say that, again, probably more to the downside is what I'd be thinking on this one. Now, natural gas is kind of in the same scenario. Natural gas, we had two levels earlier when I was with Todd. We talked about them. Again, we talked about it being above the 50, but below the 61.8. We had two different levels in there. In reality, I'll take this off. Really, God, it's kind of like level on top of each other. The problem with this one is, again, this is what we're talking about racetracks. You see how kind of it blew through once it cleared this, it just kind of went there real quickly. It has turned around. This is just profit taking right now that we're seeing because it had such a big run up. At one point today, it was up like 7.5. So people are kind of getting their profit. This one does have an abbreviated market. It doesn't go till the kind of the end of the day, end of the trading day. I would say I would say probably more bearish just because it has extended so much. Question is, where do we find some buyers stepping in? I'm curious to see. Yeah, see the basing right here? See this basing? And it's kind of right above this where it was kind of tested from, kind of this level right here. That's the 50% retracement level. So I would say probably due for a pullback, but I think if we can get down to this 50, 70, I think that's probably another buy, right? $5.07. I'd love to say I wanted to go to $2.07, but I feel like that's probably the next area. And again, we got a little hiccup here as well. So yeah, I would say $5.07 for natural gas. Again, inventory report will be Thursday on that one. Gold is dropping back. You may say, why the heck is this happening? Well, retail sales was so good. They're getting ready to crush the heck out of inflation. So it's kind of like, oh, I mean, inflation's here. Everybody knows it, but it's like, oh God. Now it did. We were talking earlier in the week about 1880 was a great sell area. We talked about 1844. It is a tested level as well. We're kind of getting close. As we would come down, I would say that we do probably have a trade set up in here that gold can bounce off of. Again, I think what I mentioned it earlier that again, gold seems to be moving. Again, it's down now. Let's see. Yeah, it's down half as much. But again, we were rallying this morning. Inflation's here. I think the next big kind of chunk for gold is going to be not when they raise interest rates. It's going to be who does it. And when any news comes out about that, we do have a lot of CPI coming up the rest of this week. This is like CPI week. CAD, pound, New Zealand, a bunch of different CPI. I think all of those are opportunities to get long gold, particularly because we're seeing it higher and higher in everything. Again, I'd be looking for buying opportunities. But for some reason, if we can get down to 1826, I think great opportunity. Okay, love that opportunity. Silver also dropping. It's in an area now, but again, it gapped here. It went over. It hit, and it's kind of slowing down. After being pushed down 0.7%, once this market closes, I think there probably will be some buying coming back in. Couple trade setups on this one. I'm going to adjust this level to here, and this is going to be kind of a Harry Potter based trade setup. Right? If we can break through this lower level, we'd be looking for shorts coming out this side of 24.50, with eventual targets down here at $24. I think we have some targets down much lower. I don't have the days in front of me right now, but I will say that we basically, non-business, non-trading days, we have 15 days left in this month, just to make it easy, and 30 days of next month, even though there's holidays, obviously. This has to move $75 in 45 days. So it's not quite $2 a day yet, but remember the projection is by the end of the year, $100. Okay, so be careful who you listen to, guys. This one I see coming lower. And again, why wanted to bring up Bitcoin? Not that we're trading it. Bitcoin is down 4.8%. Remember, Bitcoin has been the way for people to play inflation because again, you got to go there. Ethereum is down big. Dogecoin is down big. Here's why these are down big. Bernard is very anti cryptos. She's very big digital dollar. And she says we need to get this out there and be first. There's no reason that we can have these other stable coins out there that are all digital without the United States being there. So if there was a person that is going to be, quote, the new guard that would say suddenly that Bitcoin needs to go, it would be this person. It would be her. Okay. So if she gets in, again, remember, this is supposed to be 100,000 by the end of the year. Again, it's like $2,000 a day or something like that is what it needs to be, right? And again, what we're seeing is gold is more insulated right now from the gold is down 0.5. These guys are down almost 5, right? Where before, when we saw it before, inflation, everybody flocked to Bitcoin. Now we're seeing it go back towards gold, right? And again, this is the institutional money most likely. All right. So again, a lot of plays this week, a lot of stuff going on. watch that news. So again, that's it for today, guys. What I would say is thank you so much for joining me this week. Mark your calendars for next week, Tuesday, November 23rd at 12 p.m. Eastern Standard Time. We'll get at it again. Don't forget, if you're trading the opening prints, make sure you drop down to the 15-minute chart. Don't forget to look at those call spreads. Watch out for CPI all this week. That'll be both indices as well as gold setups, as well as, again, watch for dollar strength the rest of the week. Watch the Dixie and watch the VIX. If it starts going up, again, that's markets down. When the VIX is going down, markets are going up. But that's it. I'm out of here. You guys take care. If you have any questions, go ahead and message me. Support at keeptradingsimple.com, and I'll catch you guys tomorrow morning. Take care.